Hey guys, this is your host Nitin Binhani, and a very warm welcome to my startup podcast channel Jazair Audio, where we share real stories with real learnings.
Today, we're diving into yet another startup failure, the shutdown of Toplyne, a AI startup that, despite impressive early traction and significant funding, couldn't scale sustainably. Let's break down this story into two parts and finally cover the lessons to be learned. Part 1. The Rise. Toplyne was founded in 2021 by a dynamic trio of Rishan Kapoor, Ruchin Kulkarni, and Rohit Khanna, with a clear vision to empower product-led companies by converting free users into paying customers through an innovative AI-driven platform. The company built a tool that analyzed customer data to craft targeted marketing strategies using ads, in-app nudges, emails, and even direct sales efforts. It claimed to analyze user behavior and data to optimize the conversion of free users into paying customers and make the organic conversion process more efficient and data-driven. With a strong market proposition, Toplyne managed to raise around $17.5 million from renowned investors like PeakXV, Tiger Global, and Together Fund. Their client list featured well-known names such as Canva, Grafana, InVideo, BrowserStack, GatherTown, etc. Toplyne was handling data for over 25 million users and was poised to revolutionize how companies grow sustainably in the digital age, that is on paper. Part 2. The Fall. But as we know, the journey of a startup is rarely a straight line. Despite the promising early days and robust funding, Toplyne encountered significant hurdles that ultimately led to its shutdown in October 2024. In a LinkedIn post, CEO Rishan Kapoor announced the shutdown reasoning: "We were unable to achieve the scale and product market fit that we had initially aimed for." Let's uncover the three key challenges that led to its downfall. A. Inability to achieve product market fit. One of the core challenges was achieving the elusive product market fit. While Toplyne had a compelling product, it struggled to find a scalable and sustainable way to grow its customer base and demonstrate consistent value that translated into long-term revenue. The startup couldn't refine its value proposition quickly enough to adapt to the evolving needs of its clients, and that quickly turned into a major setback. B. Unsustainable growth. While Toplyne managed to secure big-name clients and substantial funding, the company's growth was not sustainable in the long run. The heavy reliance on a high burn rate for user acquisition meant that despite the impressive numbers, the revenue model simply couldn't keep pace with operational costs. In the competitive SaaS landscape, rapid scaling without a clear path to profitability can be fatal. We have covered innumerous examples of such failures on Jazair Audio. C. Investor expectations. Despite the $17.5 million in backing, Toplyne was unable to prove that its model could generate steady returns. The disconnect between a rapidly growing user base and the challenge of monetization ultimately sealed the fate of the startup. It became increasingly difficult to secure follow-on funding from the investors or pivot effectively, which the founders couldn't. Finally, lessons to be learned. So, what can we learn from Toplyne's shutdown? Here are three critical takeaways for founders and startups. A. Achieve a strong product market fit early. Innovation is exciting, but ensuring that your product truly meets a market need is essential. It's not just about having a great product, it's about finding a sustainable market and proving that your product can consistently solve a problem at scale. Toplyne's downfall confirms that lack of product market fit is the most common reason behind why startups fail, and that even includes the well-funded ones. B. Prioritize on sustainable business models. Startups must focus on sustainable growth strategies from the outset. A startup's ability to scale isn't really about rapid growth or a massive user base. It's about ensuring that your revenue streams can sustain that growth. Rapid scaling without a solid foundation can be fatal. C. Funding isn't a silver bullet. As the case of Toplyne shows, even substantial funding cannot guarantee success. Focus on building a business model that's profitable in the long run, rather than one that relies heavily on continuous external funding. D. Be prepared to pivot. In today's fast-paced market, agility is key. Remain flexible and responsive to both market changes, customer needs, as well as investor expectations. The shutdown of Toplyne serves as a stark reminder that no matter how innovative or well-funded a startup is, the fundamentals of sustainable, profitable growth cannot be ignored. Folks, that's it for today. Thanks for tuning in. Please like, comment, and subscribe to the channel. Join us next time as we continue exploring the dynamic world of startups and the valuable lessons from their journeys.